In February, 22.36% of home sellers across the Houston-The Woodlands-Sugar Land metropolitan area made the decision to cut their asking prices, a telling signal about shifting dynamics in one of Texas's largest housing markets. While the region has long been known for its affordability and strong job market, several factors are converging to put downward pressure on home prices. Here's a closer look at the leading causes of the recent price reductions. High mortgage rates are cooling buyer demand. Despite slight fluctuations, mortgage rates have remained elevated compared to pandemic-era lows. As of early 2025, 30-year fixed mortgage rates are hovering between 6.5% and 7%, which has significantly reduced buyer purchasing power. Buyers who were once approved for homes in the $400,000 range may now be looking closer to $325,000, thanks to higher monthly payments. This shift has created a mismatch between seller expectations and buyer realities, leading many sellers to lower prices in order to compete. Overpricing. Based on 2021-2022 market conditions, many sellers are still pricing homes as if it were 2021, when bidding wars and above-list offers were common. However, the market has shifted from a strong seller's market to a more balanced, if not slightly buyer-friendly, environment. Sellers who initially listed their homes at aspirational prices are now adjusting to market feedback. This lag in pricing expectations is especially noticeable in suburban areas like Katy, Cypress, and Sugar Land, where inventory has increased and buyers have more choices. Increased inventory and new construction competition. The Houston Metro has seen a steady influx of new construction, particularly in emerging communities north and west of the city. Builders are aggressively pricing new homes and offering buyer incentives such as rate buy-downs, closing cost assistance, and upgrades, all of which make resale homes less attractive unless competitively priced. As a result, resale home sellers are being forced to adjust prices to compete with brand new homes that offer modern amenities and financing perks. Seasonal slowdown and economic uncertainty. February is typically a slower month for real estate, with many buyers waiting for the spring season to kick off. Additionally, ongoing economic uncertainty, including concerns about inflation, property taxes, and the broader cost of living, has made buyers more cautious. In turn, sellers facing fewer showings and longer days on market have responded by reducing prices to capture attention before the busy spring season begins. Increased days on market. Homes in the Houston Metro are sitting on the market longer than they did during the peak pandemic period. Properties that don't receive offers within the first 2 to 3 weeks are often subject to price cuts, particularly if comparable homes in the neighborhood are moving at lower price points. This trend is especially prevalent in mid-tier neighborhoods, where homes priced between $300,000 and $450,000 are facing stiff competition and slower absorption. The fact that over 1 in 5 sellers reduced their asking price in February indicates a meaningful shift in the Houston area housing market. While the region remains relatively affordable compared to other major metros, today's buyers are more price-sensitive, and sellers must be strategic about pricing, presentation, and timing. As the spring selling season approaches, it's likely that sellers who enter the market with realistic expectations and strong marketing will fare best, while those who hold out for peak pandemic prices may find themselves making cuts before closing a deal. If you thought this video was informational, please like and subscribe.